All right. Hey guys, it's your big dreamer and doer, G Dinero, coming to you today with another TA Tuesday, this time October 14th, 2025. And guys, what a wild week it has been. Remember, none of this is tax, legal, financial, investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. And before we get started, special thank yous. This time it's going out to the guys on the other side, right? To Invest Answers, James over there at Invest Answers, CTO Larson, and Marty Party for allowing me to join them on DCA. I'll go ahead and put a link to the broadcast up here. I was just on their DCA show yesterday, guys. It was great getting to know you better. Thank you so much for including me on DCA. I would look forward to doing it again. I had such a great time working with you and learned a ton from each and every one of you. So James, CTO, Marty, thank you guys so much for having me on. And thanks again for taking me under your wing, guys. I appreciate it. With no further ado, let's jump right in. All right, we're going to start with the Bitcoin TABI model to begin right out of the gates. The TABI model, if you notice, there's a hint of orange in here, right? Notice that the orange is as the price went down. So that just shows you that the TABI model is different than a price model, right? Price could be going down, but things on the network could be looking overheated. And coming on the heels of breaking a new all-time high back last Monday, then all of a sudden we got this little flash of light orange in here saying we were slightly overheated. And then that went away immediately as soon as the big crash happened earlier this week, or over the weekend, I should say, this weekend. So we're back to yellow again on the TABI model. Yellow, remember, is neutral. Our Meyer multiple is just compressing down closer and closer to 1 right here. MVRVZ actually dipped below 2 for a hot minute on Saturday and is sitting just barely above 2 right now. And the historical volatility, look at this, guys. Volatility is back with a vengeance, right? We were flat all the way since the end of April. Just literally, it's like put a EKG on this thing and see if it's still alive, right? Otherwise, hit it with a defibrillator, and all of a sudden, thump, beep, and the patient was back, right? Here we go. We're back up at 56, almost 60 on the historical volatility right here. Again, nowhere near some of these massive volatility swings that we've had in the past, but starting to come back, which is great because, as we know, volatility is vitality, right? So now let's go over and look at the daily model. On the daily model, what we see is structurally, we're still intact with an uptrend, but boy, we sure did test making a lower low, right? Didn't close down there, closed all the way back up here, but we had that wicked wick down on Friday. Everybody is saying it could be due to the Trump or the U.S. and China negotiations not going through, and the little war back and forth on Twitter or X or Truth, right? That those guys were going back and forth. Others would say it was Binance's fault. Others are going to say that Binance was sending Wintermute on behalf of Binance was sending things to the exchanges to crash the exchanges. The oracles weren't working properly. CoinGlass wasn't working to show proper liquidation levels. Historical liquidation event on Friday, right? All of that contributed. It was like the perfect storm of everything, and it was all done at a time when over half of the world was sleeping and wasn't in front of their computer. Like, it was done at a time when the markets were very, very thin. There weren't a lot of orders on the market books, so the market makers could drive the price down very quickly, whether it was the market makers, the institutions, in my case, I think it was really Binance. I think Binance had a lot of role to play in it. Regardless, we had that massive wick down. Notice we came down and almost perfectly touched the 200-day moving average, came really close. I mean, the candle went down to 107, and the 200-day at the time was at 106.6. So within $400 of hitting the 200-day moving average, quickly recovered right back up to this point of control that we've been sitting on here for the last few weeks. We were way overheated, ended up now we're mean reverted to the downside. RSI went from a reading over 80 last week to below 50 this week. RSI back down. Let's put a number on that, 40.69. No, what else do you notice? Global liquidity also has been tanking ever since a high on September 16th. It's actually been going in the other direction. I mean, this is the trend, but this was the previous all-time high. We've retested it a couple times, and now all of a sudden, a lot of the liquidity, it looks like, is starting to get sucked out of the system right now. So that's something to keep an eye on here moving forward. What's support and resistance levels? Big area of support right down here, right around 105. You'll see this big glob right here of volume. Right now, we're sitting on the one up at 110. So I'd say 110, then the 200-day moving average, which is at 106, about 107, actually 107, 124 right now. And then right down here at 105. Those are our levels. We don't want to go below 105, guys. 105, going below that, that's bad. Going all the way down here to 95, the next level of support down, that would be no bueno. To the upside, still, we got to get back and reclaim the short-term holder cost basis, which we had reclaimed, and we were there all the way up until yesterday, and then today things started to bottom out again, and the bottom started to fall out. So really, this short-term holder cost basis, which is now up to almost $114,000, if that's the average short-term holder cost basis, that means they are all underwater right now. Anybody that bought within the last 155 days, on average, is below their buying price right now. So we've got to get back up above that, get back up above the fib level here at 115, and then reattack that 118 level like we talked about in the past. If we go over to the 4-hour chart, it looks really the same, so I'm not going to spend a ton of time here. We are mean reverted to the downside. We did wick way below 30 on the RSI. We went all the way down to 21.55 on the RSI. We did get a crossover on MACD, which led to this buy signal that we see here. The trend started to confirm and went back up. And then we ran into resistance right here at the 100-day moving average, right at this resistance zone. Why do I talk in terms of zones? Because it's not a single point. It's that area. We've got to grind through basically 115 all the way up to 120. Grind through that area, get above it, and then come back and retest it. See, this is a retest right here. This was an unsuccessful retest, and we broke all the way down below it. We went back to the current support zone, tested the very bottom of that zone, and we're sitting here in it. Guys, that zone has been on my chart since all the way back here in May. So it's not like I put these zones on all of a sudden when the price wicks back down there. These are dynamic, yes, but they're dynamic. They move to the right. I just keep extending them, the boxes, to the right. So I have an idea of where would support be, i.e. where would I want to buy? Where is resistance, i.e. where may I want to sell if I'm a trader of this asset? This is the one that I wanted to spend time on DCA yesterday. We never got to it, but I noticed something, okay? And we're going to go back. This is the one I'm going to spend a little bit of time on here with the Solana Bitcoin chart. So what you'll notice is if we go back, I mean, I'm talking way back, when we were above the 200-day moving average, it's easy to see on here. It's this bright yellow line that you see me tracing. When we were above it, that means Solana is outperforming Bitcoin. So all the way back in 2021 when Solana came on the scene, it was the darling, right? And that thing skyrocketed straight up while Bitcoin went up more slowly. So that's why in this case back here, Solana is outperforming Bitcoin. Then what do you notice? Once we lost the 200-day moving average, it no longer became support, it became resistance. And you can see multiple cases right here, here, there, almost right there, there. I mean, it was resistance all of these times until we finally broke above it right here, retested it, and then off to the races. At that point, Solana is outperforming Bitcoin. Bitcoin is not performing as well as Solana, just a different way of saying it, okay? So now let's zoom into this area. What happened then in 2023 going into 2024? Solana is outperforming Bitcoin, way outperforming Bitcoin. In fact, went all the way up to 0.0031 on the ratio. Retested the 200-day moving average, kind of close right here. Retested it again right here. Retested it again right here. Lost it. Broke above it. Did a retest, but immediately we're just like hovered on the 200-day moving average. When it's going sideways like this section right here where it's going above and below and above and below, but it's not really breaking out from the 200-day moving average, that simply means that they are equal. They're performing about the same. They both could be going up or they both could be going down, but one isn't necessarily outperforming the other. You can see that on the mean reversion right here. Look how mellow the mean reversion is. It's staying between -1 and +1 standard deviations from the mean. Then we come over here and all of a sudden Solana sells off. We go way below the mean, and now we're back below the 200-day moving average, and now it's just acting as resistance again. It's resistance, 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 all the way to here until we finally broke out again. And that's the thing I wanted to show everybody. That's a great day right there on my birthday. On August 12th, Solana broke out again when compared to Bitcoin, and we broke back above the 200-day moving average. Notice we did a quick retest of the 200-day moving average. We spent about a week going down and testing it, and then bang, broke out. And Solana outperformed Bitcoin during this period. If we go from the 200-day moving average to, maybe not to the wick, but to this candle body right here, that's a 35% outperformance, meaning had you moved from Bitcoin into Solana here on August 20th and sold your Solana back into Bitcoin on, I got to get rid of the drawing here, on September 19th, so a month, 30 days later, you'd have 34.5% more Bitcoin. Had you gotten Bitcoin into Solana here, Solana back into Bitcoin there. See, the mistake I see a lot of you guys making, and I've worked with a lot of people, guys, like over 700 people so far, teaching them how to read the charts. I see you playing in this range over here. You're worried about these little teeny tiny moves up and down instead of worrying about these massive moves when something retests a 200-day moving average and starts to break out. If you can catch the bottom of this breakout, heck, even if you were already halfway up this candle, that's still a 27, almost 28% gain. Had you swapped and then swapped back again, as soon as you see this sell signal, you see things starting to fizzle out. You see it going up against the resistance zone. Notice I'm literally going from pretty much the bottom of this current support zone to the bottom of the current resistance zone. Play the zones. Go from support to resistance. It's how you win in this game, okay? At the end of the day, it's really how you win. So what did I notice recently then? Recently, we're retesting a great, that is textbook retest of the 200-day moving average. That's as textbook as it gets. Does that mean we're out of the woods and we couldn't break back below it? No, it doesn't mean we're out of the woods. But we retested it and we started back up again. We made higher lows. We've been making higher highs. This is definitely an upward trending asset pair right now. And if it's going upwards and Solana is listed first, that means one thing: Solana is outperforming Bitcoin, and that's exactly what I expect to happen through the end of the year. So again, I don't give price predictions per se. I don't get in there and give financial advice. We've already covered that. I give friendly advice, not financial advice. It's the other FA, right? But I do believe that Solana will outperform Bitcoin, especially as these ETFs start to get approved. Yeah, they're delayed because the government is shut down right now, but once they get approved, Solana's off to the races. So let's talk about Solana on the daily chart. You can see right here, it perfectly retested the 200-day moving average during all of that craziness that happened on Friday. And if you got liquidated, my heart goes out to you. My best friend, he got liquidated that day, right? I got really close to getting liquidated because I started playing with leverage again. I got lulled into thinking this was it. This was the bottom here and we're going off to the races. Oh no, that wasn't the bottom right there because we bottomed over here. But notice we perfectly retested the 200-day moving average. We wicked down to it, closed up a little bit above it, wicked down to it, closed up a little bit, closed up here, but opened a little bit above it and closed up here. You'll also notice that we're now mean reverted to the downside. RSI is below 50, so everything is showing some signs of buying. If you look at the cloud, we almost went out the bottom of even the bearish confluence cloud. So everything was screaming, this is a buy. You buy here. You don't panic like everybody else and sell there. You buy there. You sell up here when you're up against resistance, when you're out the top of the cloud, when you got the sell signals, when you've got giant mean reversion dots to the upside. I mean, just follow the charts. Don't try to fight them. I see people trying to fight them. It's like they don't believe what they're seeing with their own eyes. Oh, but what if it keeps going higher? So what? So you missed out on a little bit of upside, but boy, you sure protected your downside risk, because if you didn't sell any Solana up here, you got smashed down here. You got smashed, right? I was in a perp back here, got out up here, went back in this pullback, never expecting it to pull back that much harder. I thought we were going to keep going up, and then boom, the bottom fell out. I should have gone ahead and taken more profits over here, but I didn't. If we go over here to the 4-hour chart, you'll see that it's similar type thing, right? We've got this upwards trending linear regression channel. We did wick way down out of it. Notice a perfect buy signal on here. Great buy signal indicated by the IADSS. We were hitting the bottom of the confluence cloud. You can see we wicked right down to the bottom of the confluence cloud. Perfect test of the 200-day moving average. At the same time, we printed a giant green mean reversion dot. What do I mean by giant? Minus 2.67 standard deviations to the downside. RSI was at 17.94. Guys, that's well below 30. And then we had the crossover right here of MACD. Everything right there screams buy in this support zone. Again, NFA, just what I was doing, buying in this support zone. Once we get back up to the resistance zone, it's no surprise that we ran into resistance right here. Started to run into resistance at the 100-day moving average, made it almost to the 50-day moving average, and then sold back off again, okay? So it's no surprise. Things tend to gravitate back towards the mean. We are back towards the mean here on mean reversion. Play the trends. At the end of the day, I don't know how else to say it. Play the trends. ETH pooped, right? It puked over here. It went all the way back to 3,500 after testing 5,000 numerous occasions for ever since people asked me to start covering ETH. I've been saying anytime it gets close to 5,000, it's a sell. Okay, I stand by that. Why do I stand by that? Because we may not have this massive alt season that everybody is hoping for. I know those of you that are degens or altcoiners, poop coiners, you're going to hate me for that. Okay, cool. I'm all right with it. I play in Bitcoin and Solana. I play in the big boys, with the big boys, the ones that I believe will still be standing on the other side of this whole thing. It's not saying ETH won't be standing, but it had its heyday. It's being replaced by faster and better technology. With that said, notice that it's starting to do a pattern right here, and I'm just going to draw it real quick. We're making lower highs and lower lows. We have actually changed direction ever since whatever that day is. I can't see it because of the my little menu down here. August 14th. Ever since August 14th, since this point right here, we did make one more higher high, lower high, lower high. The lows are going lower. That sucker is trending back the other direction right now. So I could put a linear regression channel on there right now, and it would be going like this ever since April 14th. Not saying it won't make a higher high. It may. But boy, every time it's gotten close to 5,000, this sucker has sold off hard. If you believe in ETH, you just had a buying signal right here. You had another buying signal right there, and you'll notice the IADSS is spot on. It has you buying the bottoms and selling the tops. This one, yeah, you could trade the heck out of it. Perfect trade right here. Then if you hadn't sold over here, you sold here, bought back in, perfect trade right there, selling off, buy back in. If it goes up and you get another sell signal up here, it'd be the perfect trade again. We just don't know that yet, all right? So that's what I see with ETH. 5,000 is going to be a bear. MicroStrategy on MicroStrategy. Wow, quick rebound all the way back up to over 360 last week, and then pooped the bed again, straight back down, making a double bottom here right on 300. You notice now that the market's just opened, we are sitting here right on 300 again. Does that mean that's the bottom? Nope, it could go down further. We don't know where the bottom is. A lot of that has to do with Bitcoin and the MNAV, and people think the MNAV is some special like magical number. Guys, it's sentiment at the end of the day. It is how much of a premium are people willing to pay for MicroStrategy compared to the amount of Bitcoin or net asset value of the Bitcoin held on their balance sheet. Are they willing to pay a premium of 20%? That's about where it's sitting right now. Are they willing to pay a premium of 40%, 50%? That would be a 1.5. Are they willing to pay a premium of 100%? That would be a NAV of an MNAV of 2.0. See, when Bitcoin is skyrocketing, and which it did just a little while ago, you'll note that the MNAV did rebound a little bit. When Bitcoin made its more recent all-time high, the MNAV did start to climb again. Then it went straight back down again as Bitcoin went down and as Saylor continued to sell a few shares into that rally. Last week, he didn't sell shares of MicroStrategy. He sold shares of all the preferreds in order to buy another couple hundred Bitcoin this week. I do see him starting to go more into using the preferreds. I'll link to the video here that I made about it where I talked all about MNAV and even at an MNAV of 1 where the price of MicroStrategy could go to. So be sure you check out that video that I made if you have questions about it. But right now, we are sitting on a strong area of support, which is right here at 300. If I go over to the 4-hour chart, you can see it a little bit better. Here's this green zone that I put. But the bottom of that zone is at 285. Don't be surprised if we don't wick down there. But look, we're green dots. We are mean reverted to the downside, so we are oversold. RSI dropped below 30 again for the second time in just the last month alone. MACD is starting to level out and starting to head back up again. Here's a cool thing. We at least have some volatility back in this sucker, right? It was dead forever. This is like a measure of implied volatility down here. And this thing was going sideways for since May. Just nothing. Just beep. And then boom, thumped it with some defibrillators over here and whack. Right back up to a much higher implied volatility. Remember, volatility is vitality. That's what allows Saylor to be able to do his magic with this flywheel. So am I short-term, like 1 week bearish on MicroStrategy? Perhaps. Am I long-term, like anything over a month or longer, bullish on MicroStrategy? Absolutely. Did I sell any of my MicroStrategy? No. Did I hedge the hell out of it right here with a whole bunch of covered calls? Yes. A lot of covered calls. It generated a whole bunch of cash that I can now use and plow back in and buy more shares here at the bottom. Perfect. And I didn't have the capital gains sale up here. I used options instead, so I didn't have to. Okay, so what are we going to have for resistance to the upside right here, guys? This big block right here of volume. We got to break back through the 335 to 345, 350 zone. We're also going to start running into the 50-day moving average at about 345 and the 200-day, which is now at 350. So that will present a challenge. You notice every time we've gotten close to the 200-day moving average, this yellow line, we haven't been able to break above it. Not surprising. But once we break above it, magical things happen. We retest it from the upside and we continue going up. Notice how it retested here and went back up. Retested here, went up massively afterwards. When you retest it from the bottom, no bueno, because that means you usually pull back and you got to make another attempt at it. You got to make another run at this 200-day moving average and then come back and retest it and go off to the races. So that's what I anticipate happening. What time frame? Your guess is as good as mine. I'll have to get out my crystal ball next time. Let's move over to Tesla. Tesla here on Tesla. We are on the daily chart. Tesla actually weathered that storm pretty well, a lot better than I thought it would have when all this stuff went down on Friday. We did pull back into this zone of the gap that you hear me keep talking about. This is on the daily chart. You'll notice we did print a sell signal. That was last week. We also have the red mean reversion dot that was more than one standard deviation to the upside. RSI was well above 80. Everything is starting to trend down right now. Not surprising that the price is also trending down. And it's leading into the earnings that's coming up. You guys know I've talked about this earnings a bunch. Let's move over here onto the 4-hour chart. Let's kind of zoom into this area. What do I expect to happen? Okay, what do I expect to happen? I expect us to kind of continue trickling sideways until we go into earnings. Maybe a quick little bump beforehand, and I do expect a sell-off afterwards. Okay, with how much certainty? I'd love to give it more than a 50-50, and I know that doesn't help you guys one iota, but I'm going to give it a 50-50. Why do I say that? There's the side of me that says maybe Elon says something at the earnings that really sparks a lot of interest in investors and gets them to stop thinking about it like a car company and start thinking about it like an AI company and really focus on all the great things that are on the a little bit further out horizon, right? Not in the next three months, which is what Wall Street really cares about, but 6 months or longer, right? 6 months or longer, boy, the future is incredibly bright. The next 3 months, I don't know what the catalyst is that makes it do this. So if investors are disappointed and they don't think the next 3 months are going to be miraculous, then I do see a sell-off. I see the gaps potentially filling, a retest, because we never retested. Those of you that follow me and have been following me a while know I talk about retests of previous resistance zones all the time. If we zip back, we hit this we'll call it 363, since that's what it is on my chart. We hit 363, rejected, 3 times in a row right here. Finally broke above it, came down, retested, broke below it. Then it became resistance again. It became resistance again, resistance through this whole time period. And that takes us to today. We broke above it and didn't come back down and retest it, just broke above it and kept going up. It's not unusual to come back and retest a previous zone of resistance and make it support. Turn that area into support. Could that happen? Perhaps. I'm a believer that it does. Maybe I'm just being optimistic that I get another bite of the apple and I get to buy some more Tesla down there in the 360 to 400 range. But I am a buyer of Tesla below 400. Doesn't mean you need to be. Remember, I don't give financial advice, but I am a buyer of Tesla below 400 because of all of this price action up here. These guys, when they start getting underwater, they're going to sell off. I'll gladly take their shares when they drop down into this range so that I can sell them back to them back up in this range again. That's trading, guys, at the end of the day. All right, so that's what I see with the 4-hour chart. At a minimum, pulling back to the 61.8% fib level, and we'll see. We'll see how it works out. Nvidia here on the Nvidia chart. This is on the daily. We are still structurally in a strong uptrend, although we are coming back down right now and retesting this 50-day moving average, okay? We're retesting the 50-day moving average. We have started to run into significant resistance right here up to about 190. Sure, we broke up to 195, but it was super short-lived and right back down into this zone. Again, I talk about it as zones, right? You can see how it's basically ping-ponging between the green, think of that as buying zone, support zone, and red, think of that as selling, resistance zone. It's ping-ponging back and forth. We're kind of neutral, just slightly overheated, a little bit overbought, and we're at about 50 on the RSI. We did just have the crossover occur right there where MACD crossed down. That oftentimes will give us a sell signal also on Confluence. Coming over here to the 4-hour chart, if we kind of dig in and we zoom in, we can see this sell-off that I'm talking about right now. I think there was some chip news. Anytime there's China and chip news, boy, that's a mouthful. China chip news, this sucker sells off, and that's your opportunity right there, right? It was just 195, and today it's 180, right? A $15 drop. So if you're looking to pick you up some Nvidia, it gets down into this previous support zone that you see down here. Wow, that's definitely a buy. It goes down here to the 50-day moving average. You might take a nibble like it did earlier today. It obviously wicked down to this 50-day moving average, which is sitting right on about 180. However, we're still slightly overbought because we're still printing red mean reversion dots above the mean. RSI has dropped, but it's not down below 30 yet. And same thing, MACD is heading down. All of those things suggest that this should keep going down. Then we end up printing a green dot down here. We maybe drop below 30 on RSI and we see MACD cross over. That's your buy signal right there when all those things occur. So no guarantees those things do occur, but that's just what I see coming up with Nvidia. Next on the list is this guy. This is the one where I was wrong. I'll admit it every time. I thought that was the bottom and MicroStrategy would skyrocket from there. Unfortunately, it's continued to go down, and we've now retested the 0.70 level twice. I made a whole video about this. I'll just link to it here. It'll be the easiest thing to do is to link to the video here so that I don't have to go talk about it all over again. But I still do believe this is the bottom. I left this on here where if you bought the bottom, if you took Tesla into MicroStrategy here, and then went from MicroStrategy back into Tesla there, you'd have 20% more Tesla. So play those swings. I know it looks like I'm cherry picking it, but not really. Play from one side of the linear regression channel to the other. Just that alone. Maybe you're playing it based on the trend flip. You wouldn't have gotten quite as much of a gain, but you still would have gotten a gain. Maybe you're playing it from green dot to red dot, right? I mean, whatever you're using, I gave a bunch of different things, fib level to fib level. There's a bunch of different things you could be doing with this pair to grow your MicroStrategy and or Tesla stack, or to grow your Tesla stack and or MicroStrategy. Over here, MicroStrategy IBIT pair, I thought the bottom was in when it was at about 5.5. It went down to 5. I was saying that's got to be the bottom. It keeps going down. What is happening today is MicroStrategy is climbing versus IBIT. Hence why this is going back up again. After making a low of 4.5, we're back up to 4.8. After going below, so let me go ahead and get these guys lined up. After going below the cloud again, you can just barely see it, but we were definitely right at the bottom of the cloud right here. We went back up towards the top of the cloud. We went out of the cloud over there. Notice that correlates with big wicks down on the pair chart. So you can play this thing numerous ways. You can use the ARB cloud, which is awesome to use. That's what you see over here on the right-hand side of the screen. You could use a classic pair trade using IADSS over here. You can use a combination of the two. That's why I have both on the same chart. Moving into strategy over here, strategy to the rotation model. Last thing it said to do was to go into Palantir. I think I told you guys I did not sell my Nvidia to go into Palantir, because I felt like I was lighter on Nvidia than I was MicroStrategy. So I just went ahead and unloaded some MicroStrategy shares to get him into Palantir when this call was made. So that's the latest and greatest right there on the rotation model. I know a lot of you guys have asked me, could you do a deeper dive on that? I've already done it. It's right here in my video list. So check out the rotation model video that I made. Also, Jacob over there at Invest Answers, as well as James, they've made multiple more rotation model videos since. I think Kurt, who is Cypher Sniper, was on Tom's channel and made a video over there. So there's lots of videos that have been made about the rotation model. It's not my singular focus, just so you know. To me, it's just another tool in my armament. It's not my primary tool that I use. That's IADSS. You guys see me use that all the time on every single chart. Last but not least, over here on STRK, STRF, STRD, STRC, the S's, as we call them, the preferreds, they took a hit, right? They were starting to get back up. STRK got back up to par value. Then the massive sell-off on Bitcoin caused a sell-off in MicroStrategy and went back down here to 90. So it dropped 10% just because of the movement of Bitcoin and MicroStrategy, because this is tracking the underlying, because 10 shares of STRK are tradable for 1 share of MicroStrategy, or convertible into 1 share of MicroStrategy. So it makes sense if MicroStrategy goes above $1,000 a share to convert STRK over into MicroStrategy, right? But it's nowhere near 1,000. It's only at 300 right now. So this makes no sense. STRD, that's the junk bond one. So it basically got back up to like 85 and sold off down to 80. I don't touch that one. STRF, that's the longer duration where it pays out a quarterly dividend. Quarterly, not monthly, quarterly. It was sitting on 110, 111, 112 for the longest time. Skyrocketed up here to 117 on the excitement of MicroStrategy moving and the excitement of Bitcoin moving. And because it sits the highest senior on the stack, on the capital stack. However, it's right back down to where it was, 110, 111. It pays out a 10%, annual dividend. So really, it's kind of a wash. You're already, the 10% premium's already built in because it's 10% above face value right now. That leaves us with STRC, my fave. And STRC for a hot minute actually got back up to par value for the first time ever in its history right here last Monday, and then got really close to staying there and then settled back in at its preferred $99 price. Why $99? Well, it might be because it pays out a 10.25% annual dividend. If you take 10.25% and divide it by 12, because it pays it out monthly, that's an 85.4-cent dividend every month. Notice it's selling for right around $99 right now, 90, 98, 97, call it $99. Add 85 cents to that, you're at $99.80. You're within 20 cents of par value. So the dividend is priced in there too. So for those of you that are saying, well, I'm going to wait for it to pull back to 92, 93, 94, 95, it's likely not going to happen with STRC. It's going to stay probably, in my opinion, between $98 a share and $101 to $102 a share. It's going to stay somewhere in that range because of the way it was designed. It is dynamic. It is designed to stay in that range. So when you're buying it somewhere close to 100 in your brain. You just need to go somewhere close to 100. And I'm holding it as cash until I need to deploy that cash somewhere else. It's where I hold cash nowadays, because for every share that I'm holding, I'm getting paid 85 cents a share, 85 cents a share, 85 cents a share. You hold it for 10 months, you've made $8.50 off of that single share that trades at or around $100. So you're already up 8%. That's how to look at it, is the yield that you're earning on your cash. Don't look at STRC as a trade. It is definitely, of all four of these, it is the one that is not a trade. Okay, it's not a trade. All right, guys, I hope you found value in today's message. Just a quick happy heavenly birthday shout out to Mr. Charlie Kirk, who was assassinated just about a month ago now, if you can believe it. It's been that long. But today would have been his birthday. I don't remember which one it would have been, but I know he was a very young man when he got killed. I guess you could do the math right there, and he would have been 32 years old today. And so happy heavenly birthday to you up there, Charlie. We're carrying on down here, buddy. Don't you worry. And if you'd like to see more content like this, guys, make sure you smash the like. Hit the like. Comment below. What'd you like best? What'd you learn? What would you like to see more of? Make sure you're subscribed to the channel so you see more of my videos, but also others that are making videos like mine. You might like their style better than mine. That's cool. It's just about helping you get better at your own trading and investing. And if you'd like, make sure you book a course. That shouldn't say individual appointment. Book a course or join the community at www.gdinerocoaching.com, right? Book a course. I teach a course on TradingView and technical analysis. I teach a course on understanding options. All the details are available on my website. Check it out and join us. And finally, thanks, guys. Thanks for tuning in. I'm G Dinero. I'm here to help you increase your financial literacy to help put you and your family on that path to financial freedom. Thanks for tuning in. We'll see you next time. Take care.